Okay, good morning, everyone. Welcome to today's class. Hope you had a great night rest. And from yesterday's class, I trust that we had an amazing time in yesterday's class. The panel session was buzzing. It was really buzzing, and I really, really loved it. Okay, so just wait as people join us. I can see Isima Sifa, you've joined already. Okay, Ola Raymond. Welcome, Matomi, Dawood, welcome. Okay, I think we'd wait a while for others to join us before we fully kick off today's session. But already we have our speaker in the house, um, ready to speak to us this morning. So I would like us to wait a while as others join. Yeah. Okay, I can see Ahmed. Welcome, good morning. Okay. Okay, people are joining already. That's what will make a while for everyone to join before I go on and read a bio. Okay, Faithful, welcome. Nexa Care, welcome. Sifa, welcome. Good morning. You can send a message to your teammates. Tell them that class has started already and we're kicking off soon. Today's class is about building strong financial habits, to ensure that your business succeeds. This is a session anyone cannot afford. You cannot even afford to miss it. From yesterday's panel session, you heard some of the key things that the panelists mentioned, and having strong financials is one of the things that you must pay attention to, not just for you to be able to get funding, but also helps you to be able to make sense of your business, to know the right decisions to take. So send reminders to your classmates, send them a message that class is starting already. Okay, welcome Amina Chobande from Nigeria. Welcome. All right. I'll kick off with reading a bio as we wait for others to join us. Florence Damilola Olatunbosun is a leading financial educator at Money Africa, passionate about helping entrepreneurs and business owners. Okay. Okay. So Florence Damilola Olatunbosun is a leading financial educator at Money Africa. She's passionate about helping entrepreneurs and business owners develop the right money habits to achieve sustainable growth. And she believes that the strength of a business lies not just in its products or services, but in its daily financial decisions that shapes its future. She's a chartered accountant who earned a designation while still in the university. Damilola's academic journey reflects a discipline and commitment to excellence, graduating with a distinction in a national diploma and ranking among the top 10% of our undergraduate class and building a solid foundation in finance early on. With over 5 years of experience in banking, development finance, and personal wealth education, she has mastered the art of designing financial systems, optimizing cash flow, and guiding entrepreneurs to make data driven financial decisions. She has trained nearly 300 individuals and implemented systems that have helped organizations improve efficiency, cut waste, and increase profitability. At Money Africa, Danola develops practical financial education programs and tools that empower African entrepreneurs to track expenses, manage cash flow, reinvest wisely, and separate personal from business finances, core habits that position a business for long-term success. Our mission is simple yet transformative. Our mission is simple yet transformative, and it's to what? To equip businesses with the discipline, systems, and mindset to not only survive but thrive. So, with a round of applause, Let's welcome our speaker for today, Mr. Damilola. Olatunbosun. Welcome. Thank you so much for being here with us.
Thank you so much for having me, Bukumi. It's really nice to be here, and I must say that you guys are doing a wonderful work. Thank you, thank you, thank you. So, just like Bukumi have said, my name is Florence Damilola Olatunbosun, and today I've been asked to talk about building strong financial habits for business success. Building strong financial habits for business success. And I believe before we can even talk about habits, the first thing we need to talk about is business. And I believe that every one of us that for you to be on this call, you're either into business already, or you're trying to scale your business, or you're about to start one. So before I go into talking about how to build financial habits for business success, I would want to tell you a personal story. So my name is Florence Damilola Olatunbosun, but you can call me Damilola. Few years ago, I think during my preteen, my dad had a thriving business. And when I say thriving business, he had a thriving business and is one of the household name in my state where I grew up. So after running his business for a while, he realized that he was just running into debt, couldn't pay suppliers, inventories are reducing, they're selling, right? They're making sales, he could not pay his supplier, inventories are reducing. So he was wondering what exactly is going on. But unfortunately for my dad was not able to discover what was going wrong with his business until he ran bankrupt. And when I mean bankrupt, I mean like the banks were knocking on our door as a child. The bank was knocking on our door. There was no inventory in the shop was empty. From one case to another, we had different type of issues, suppliers, different stakeholders were just reaching out to my dad, trying to understand why my dad could not pay them back. So fast forward 1 or 2 years down the lane, my dad got a big contract, and after getting the big contract, he was able to get things moving again. So this time around, he decided to do something different. He invited my mom to come and help him in his business. So my mom came around and she started to help him in his business. So my mom realized that when my mom joined the business, she realized that they had poor record keeping habits. That is, they bring in goods from suppliers, they don't record it. They make sales, not all the sales are recorded. Cash, not all the cash that is being collected from the customer is being deposited into the bank. Employees have access to inventory, they pick inventory, they sell without remitting, some just pick, they steal some of the inventory in the business. So my mom had to put systems in place. So I'm still going to continue with my story, but let's talk about building strong financial habits for your business. Building strong financial habits for your business. So first thing I would like us to do is I would like us to understand why financial habit matters. Why does financial habit matters? I'm pretty sure you've heard about, oh, we should build strong financial habit. The next question is, why does financial habit matters? For your business to be profitable, a business can be profitable on paper, but still fail without good financial habits. I always say this, that the fact that you have a good business idea, you're making sales, that does not necessarily mean that your business will succeed. If you don't have the relevant financial habits, your business can fail. Your habit will determine whether you will survive during tough time. So of course, everybody will talk about, oh, you should build financial habits, but this habit will determine whether you will survive when the going get gone. It will also determine whether you would grow. I'm going to tell you the story of growth during the course of the meeting. Then it will also determine whether you have access to funding from banks or investors. So let me take it again. Why does financial habits matter? We always talk about, oh, you should build financial habits, but why does financial habits matter? A business can be profitable in paper, not even in paper alone, even in real life. You can sell, make profit, but if you don't have good financial habits as the manager of that business, remember, you're a manager, you are the manager of the business. The fact that you're a founder does not mean that you're just a founder alone. You are also responsible for the management of the business. This will determine whether you will survive when the going gets gone. It will also determine whether you're able to grow your business. That is, maybe open more branches, introduce other income streams. It will also determine whether you will get access to fundings from banks or investors. I believe it's a show of hand if I say, oh, everybody should, people that have that would like to get access to funding, a lot of people will raise up their hand. More than 50% of us on the call will raise up our hands. So, but now, what will determine whether you will survive, whether you would grow, and whether you have access to funding is your financial habits as the manager of the business. Before we talk about financial habit that you as a manager or the management should have, let's talk about the common pitfall business owner face. Most business owners do this a lot. One, they mix personal and business money. I cannot overemphasize. Business owner, please try as much as possible to separate your business money from your personal money. Try as much as possible to separate your business money from your personal money. You don't want a situation whereby you are mixing your personal money, you're using your business money to pay for your groceries, you're using your business money to pay for your vacation, and you're using your own money to fund the business. That is really, really bad. Try as much as possible to separate it. And how can you separate your money? I always say that the best way to separate your personal money from your business money is, one, open a separate bank account for your business. Open a separate bank account for your business. The moment your business start making money, try as much as possible. Even if you cannot open a corporate account, you can open maybe another personal account in your name, but you will know that the money that comes into this and the money that goes out is related to your business. So business owners, try as much as possible to separate your personal money from your business. Don't use your salary to pay your employee, or don't use your business money to pay for your groceries at home. The next common mistake or pitfall that I see a lot of business owners do is spending revenue before covering expenses. So you've calculated, a customer just placed an order, and you've calculated in your head, okay, I've made this, I'm going to use this to do this, I'm going to use this to do that. Personally, no, that doesn't make sense. Try as much as possible that you cover your expenses. So there's something in accounting that we call the top line item and the bottom line item. The top line item is your revenue. And as a business owner, your revenue should be able to cater for every other line item and even give you something known as profit. So if you spend your revenue before you cover your expenses, your direct expenses, your indirect expenses, you would have nothing left for profit. So try as much as possible, when you have your revenue, that is, it could be what is your revenue? It's usually your sales, that is your selling price multiplied by the number of items or services that you've rendered. That is revenue. Now, you've recognized your revenue. Ensure that you take out your direct costs. That is, what are those costs that are associated with rendering that particular service or selling that particular product. Take that out. Then the next thing is cover your indirect expenses. If you have rent, if you have data, salaries, let's not forget, please do well to pay yourself as a business owner. Don't say you're doing the business selflessly. Try as much as possible, no matter how little, try as much as possible you pay yourself so that you won't be dipping your money into your hands, into the business money. So pay salaries, rent, internet, and all of that. All of these expenses must be covered. When all of this is covered, then you have your profit. Now let's go to the third common pitfalls that most business fail. Ignoring small expenses. They always say it doesn't matter. But guys, I would like to tell you, the fact that it doesn't matter does not mean it does not add up. The fact, I would like to repeat that again. The fact that small expenses does not matter does not mean it doesn't add up. I'd like us to do a simple exercise right now on the call. Imagine you buy data. Imagine you buy data, 2,000 naira data. Maybe you're trying to buy 2 gig, maybe 2,000 naira data every day. 2,000 naira data every day. Let's just assume you buy 5 days a week. That is how much? That is 10,000 naira. Now imagine 10,000 naira times 4. That is 4 weeks. That is 40,000 naira. Now, 2,000 naira might not matter to you as a business owner, but are you going to say 40,000 naira does not matter? And that is just for a single line item like internet. We've not even talked about maybe airtime. We've not talked about, transportation. So as a business owner, I would like to say this: try as much as possible not to ignore those small expenses. No matter how little the expenses might be, try as much as possible that you recognize it in your books of accounts. Because you not recognizing it in your books of accounts means that you will be over declaring your profit. And remember, if you're over declaring your profit, what that also means that you'll be overpaying you'll be overpaying taxes. So try as much as possible as a business owner, for every expenses you incur, ensure I'm going to talk about record keeping. Record keeping is the next pitfall. Ensure you document it, right? Ensure you document it. And a good way you can do this is, if you don't want to go through the stress of, every day I'm recording, I use a simple principle. Ensure that all your transaction is being carried out from your mobile app. And the good news is that with the help of mobile app these days, you don't necessarily, before you carry out a transaction, you must enter the narrative. So that means that if you are spending, you must definitely record what you are spending for. So no matter how little that you are spending, try as much as possible that you document it. And at the end of the month or at the end of the period, you recognize this in your books of accounts. Now, the fourth pitfall I would like to talk about is poor record keeping and relying on memory. I don't know. Why are you stressing your brain? Why are you trying to rely on your memory as a business owner? Please stop doing that. If you've been doing that, please stop doing that. Not when you want to start thinking. Please don't do that. I would want to advise that, please, as a business owner, try as much as possible to go about with as little as a jotter and a pen. You don't necessarily need a big jotter like this. You can just get, the small one that can easily fit into your bag. Try as much as possible you get that as a business owner. Or for those of us that are sophisticated, you can use your notepad. Every phone has a note where you can easily just record, or you can write on. So please try as much as possible that you keep your record. And when I mean your jotter and your notepad, that is not the final. You're expected to transfer this information into your books of account. The only reason why I recommended that, to ensure that you keep proper record, use your jotter or your notepad, is so that you don't forget. Because remember, it's not all the time you might have access to either the software you're using for your record keeping or the Excel you're using for your record keeping. So please try as much as possible. Please try as much as possible to ensure that you keep proper record. And the good news is that, guys, remember, the government, everything is changing. The tax reform act that came out shows that business owner will be expected to file their books. So that if you don't file your books, you have to pay penalty. So this is the best time for you as a business owner to ensure that you keep your record. Then the last common pitfall that I know that a lot of business owners face is no emergency buffer for shock. No emergency buffer for shock. A lot of business owners just feel that, things will be rosy. They don't actually have an emergency buffer. For those people, for individuals, we know that we always advise that, you should have an emergency fund, or you should have an emergency fund in case of emergency that can support you, right? That can serve as a cushion. The same for your business. It is very essential that you have what is known as an emergency buffer for shock. The truth is that, especially if you sell seasonal goods, If you sell seasonal goods, you know that it is not all season that you'll be making sales or your sales will be high, right? So you need to ensure that you have a buffer for yourself that can at least pay your employees, especially when your employees are not on project base. Now at least pay your employees when sales are not forthcoming. That would at least maybe pay for rent, lights, those basic expenses you incur month in, month out. So I'm going to take it all over again. First common pitfall that most business owners face is mixing personal and business money together. Please, guys, if you've been mixing your personal and business money, I want us to stop that today. Make a pledge today that I will no longer mix my personal and business money together. And I told us that in order for the simple way not to mix your personal and business money is to have a dedicated account for your business. It does not have to be a corporate account. It could be your personal account if you don't want to open a corporate account. Be your personal account, but have a dedicated account for your business. And the truth is that if you know that, you are definitely into doing this business for the long term, your plan is to grow the business, which is one of the reasons why you're on the call this morning, then there is no reason why you should not open a corporate account for your business. You're not too small to open a corporate account, but in the meantime, you might want to have a dedicated account for your business money. The second is spending revenue before covering expenses. Please, if you've been doing that, this is the right time for you to stop. The third is ignoring small expenses. You always tell yourself it doesn't matter, but guess what? It adds up. And I gave us a simple example, buying airtime every day or buying data every day. When you multiply it by 5 times 4, you can see that it actually matters. Then the fourth is poor record keeping, relying on your memory. Please don't rely on your memory. Don't stress your memory. Just get yourself a notebook or use your notepad on your phone. You are always with your phone. So even if you are not always with a jotter and a biro, you are always with your phone. So you can use your notepad. Now, not having an emergency buffer. Guys, I would want us to have an emergency buffer. If your business must grow, and if you've been doing business for a while, I'm pretty sure you will now know that, there will definitely be those quiet moments in my business. So having an emergency buffer would help ensure that you don't owe salary, you're able to pay for your utilities. Now, let's talk about some core financial habits. Remember, that is why we're on the call. Core financial habits for business growth. The first is separate business and personal finance. What else were you expecting? That is the first. Separate your business and personal finance. Remember what I said, open a business account. Banks usually offers low cost SMEs account. And if you go to banks like EcoBank, Zenith Bank, they usually have like a low cost SME account that you can open for your business, right? The second is, please don't pay for groceries, don't pay for personal rent, don't pay for clothing from your business income. Please, a lot of business owners do this. They pay for their personal groceries, they pay for their rent, they pay for their clothing. And that is not to say that, your business cannot pay for these things. Of course, your business can pay for these things, but it should be clearly stated that, of maybe in your employment contract, you remember you are an employee of your business, right? So if you want your business to pay for your groceries, your rent, your clothing, then in your employment contract, you should clearly state it that your business is entitled to give you an allowance. It could be housing allowance, it could be clothing allowance, it could be utility allowance. The reason why I'm breaking this down is because most time you use your business money to pay for your groceries, your rent, your clothing. And guess what? Of course, your business is going to grow. And because your business is going to grow, at a point, you're going to have to start filing your account with the FIRS if you're in Nigeria, or with the tax authority, wherever you are. You're definitely going to file. And when you file, they would ask you to see your expense. They will ask to see your expenses. The moment they see groceries, they see personal rent, they see clothing, they are going to disallow it. they are not going to recognize it as an expenses. But if you've taken the step to make, if you want your business to pay for this, and you've taken the step to like recognize this as part of the benefit you get as the manager of the business, then it becomes an allowable expense. Do you understand? It becomes an allowable expense. But if you just go all out, oh, I'm just paying for this, the tax authority is going to disallow it. They're definitely going to disallow it. So never pay for groceries, personal rent directly from your business income. Now, the third is pay yourself a salary. I cannot overemphasize this. Try as much as possible to pay yourself a salary. Recognize salary, even if you are the only employee of the business. Every month, even if it is 10,000 naira your business can afford, if it is 5,000 naira, if it is maybe a percentage of your profits your business can afford to pay you, try as much as possible to pay that, because that would help you. It will condition your mind that, oh, I've taken money from this business already. So even when the need arises and you're like, oh, I want to take money from my business, maybe to take care of a personal need, you can rely on your salary. But if you don't pay yourself a salary, we are all humans. They might have like, wait, I've not even gotten anything from this business. Let me just take something small. And guess what? That's how you start dipping your hands into the company's money. But if you set a principle, if you set it up in a way that, oh, you pay yourself a salary, either weekly or per project or monthly, it will be fine. So I got an example here. A baker pays 50K monthly salary instead of dipping his or her hands in daily sales. Remember what I say, you can place yourself depending on the capacity, depending on what your business can afford. Don't say, oh, looking at my qualifications, I am smart, I am this, I'm dedicating 100 hours. But if your business cannot pay you up to that amount, you will run that business bankrupt. So the question now is, you need to ask yourself, can my business pay me? How much can my business pay me now? It could be a percentage of profit, or it could be a fixed amount every month, or every day, or every week, as the case might be, depend on how you sell. And then the second habit I want us to talk about is tracking every expense. Guys, you need to track every expense. Remember I made the example of airtime, right? There's a need for you to track your expense. There's a need for you to track your income. There's a need for you to track your expense. And before I go into tracking our income and expense, let me go back to the story I was telling you at the beginning. So my mom came around. After my mom joined my dad's business, she realized that they don't record their inventory they receive from their supplier. They don't record all sales. Some employee sales, they just give the money to the manager. So she noticed that all of this was not being done, right? And bear in mind, my mom is not a graduate. All of this she learned from managing her business, her provision business. So she just translates the knowledge. She just transferred the knowledge from her provision business to my dad's business. So she made it compulsory that they have a sales journal or a sales book. She made it compulsory that they have a purchase book and an expense book. And to be honest, as a business owner, these key books that I just mentioned, sales, purchase, and expense, are like the three basic books you can keep. Sales, I'm going to repeat again, sales, purchase, and expense. So what she did was, for every time they make a sale, the first thing must be entered. For every sale they make, they must issue a receipt. And these sales must be recorded in their sales book. Whenever they make purchase, whether credit purchase or cash purchase, so I'm just going to break it down. Credit purchase is when you buy something from your supplier. So if you're a baker, when you buy flour from your supplier and you bought on credit, with the hope of paying back in the future, that is credit purchase. And if you paid for it in cash, that means you gave them cash, that is cash purchase. So for every credit purchase, for every cash purchase, must be recorded in their purchase book, right? Then expenses like, oh, they have a customer, the customer came and they're like, oh, madam, let us buy for you minerals so that You can let us get that for you, maybe refreshment. Let us help you get water so that you can calm down. For every expense you are incurring, electricity bill, transportation bill, all these expenses must be recorded in their expense book. Then the last book I would want you to keep as a business owner that is just starting or about to scale their business is your cash book. Is your cash book. So sales, purchase, expense, and cash book. So let's come back to our presentation. I'm going to take you back again. I'm going to continue my story as we go on. Track every, even if it is 500 naira airtime or printer paper, no matter how insignificant, try as much as possible that you track it. And you can track it by like the way my mommy was doing, by using a book. That is, you can create a paper ledger. Or, of course, we are Gen Zs, we are millennials. We don't use paper. We use softwares like Excel, Google Sheets. You can do that. Everybody have Excel, even on their phone. Everybody have Google Sheets, even on their phone. So you can create that and you can use that to track your expense and income. And if you want to take it to the next level, you can use tools like Zoho Books, QuickBooks, Wave. You can use any of those books, but remember, if you're using any of those books, you have to pay you have to pay subscription, you have to pay a fee. The benefit of tracking your income and expenses is that it helps you to see where money goes, it helps you to control cost, and it helps you to prepare a report. Let me take it again. The benefit of tracking every income and expenses is that it helps you to see where money goes, control cost, and prepare report. Now, so remember I told you that my mom was using paper and biro. She had a book, this big long leaf, those ones with thick cover. That was what my mom was using. So for every time they make a sale, they record it. That way, the employees were not able to make sales and not give the relevant because of that, because my mommy was recording all the sales, she ensured that no employee make a sales without depositing the cash to her or the manager, or even lodging it in the bank. They were able to track expenses. Employees were not just incurring expenses without authorization. They were able to ensure that all expenses was being tracked. And also, they're also able to track their inventory because now they know what is coming in from their suppliers. So as an exercise, while you're on the call, I want you to write down the last 3 expenses that you did not record. As a business owner now, I want you to write down the last 3 expenses that you did not record. Is it purchase of airtime? Is it paying for your utilities? Maybe electricity bill? Is it maybe you bought some new supply, you got some new supplies and you pay for and you've not recorded it? So I want you to take time now to write those expenses down. I believe we've written it down. So let's move to the third habit. It's getting interesting. The third habit, maintaining positive cash flow. I'm going to sit down here a bit because remember, cash is what? The lifeblood of every business. Cash is what? Cash is the lifeblood of every business. And as a business owner, you must understand your cash flow. Remember, I would like to say this. I would like to debunk this myth. One is cash flow is not profit. The fact that you have cash sitting down in your bank account does not necessarily mean that you have profit. It is simply the actual movement of money in and out of your business. A business can be profitable on paper, but still fail if the cash flow does not cover the day-to-day obligations. And yes, business owner, it is possible that your business is profitable. I'm not going to dispute that. It is very possible that your business is profitable, but your business can still fail if your cash flow cannot cover the day-to-day obligations. So imagine your business is doing well, but unfortunately, you cannot pay your rent. Your business is doing well, but unfortunately, you cannot pay your transportation or your employees. The third is healthy cash flow ensures you pay your bill, reinvest, and seize opportunities. So I'm pretty sure every one of us, let's talk about new opportunity. Every one of us must have, especially business owners, you must have seen an opportunity to maybe buy some of your supplies at a discount, or maybe for those people that you for some of us that do drop shipping, maybe you have some cash just sitting idle in your bank account, and then your friend is like, hey Fatima, I'm currently in China, and would you like to buy one or two things? I can help you buy it. If you don't have the cash, you won't be able to seize those new opportunities. So healthy cash flow ensures that you're able to pay your bills, pay your employees, pay utilities, right? Reinvest into your business and seize opportunities. I know you're confused at this point. That means, what should I monitor? What can I monitor? The first thing you need to monitor is your inflows. This includes your sales revenue. What have you sold? What is your account? How much did my customer pay? Did I sell any of my assets? Did I make any investments? You need to monitor those inflows. Inflow simply means those money coming into your business. Then the next thing you need to monitor is your outflows. Your outflow is referring to those monies that leaves your business. Like if you're paying for rent, you're paying for utilities, you're paying salaries, you're paying your supplier. If you have loan, you're paying your loan. If you have taxes, you're paying taxes. Those you need to clearly monitor it. Remember, I told us that there are 4 books of accounts you need to keep as a business owner. The first is your sales. Second is your purchase. The third is expenses. And the fourth is what? Your cash flow statement. And for your cash flow statement, basically you're looking at your inflows and you're comparing it with your outflows. Your inflows, I talk about sales, revenue, customer payments, asset sales, and for your outflow, we are talking about rent, utilities, salaries, supplier payments, loan repayables, taxes. The goal as a business owner is to ensure that you maintain a positive cash flow. That is, your inflow at all time must be more than your outflow. So which means that if your inflow is ₦1,000,000 in a month, and your outflow is 800,000 naira, you are still on the good side because you have a positive cash flow, right? So at all times, you must ensure that your inflow is greater than your outflow month on month. The moment your outflow is greater than your inflow, that means you're having issue as a business owner, right? So make it a point of duty today to ensure that you monitor your inflows and you monitor your outflows. And the good news is that by monitoring your outflow, you will be able to identify leakages. And what do I mean by leakages? Leakages simply refers to those expenses that you are incurring that might not necessarily be adding to your business. So you're incurring these expenses every day, you're spending money on these expenses, but it is not impacting your sales. Imagine you are running a ad that is not converting, and you've funded the ad already, and every day you're running, but the ad is not converting. That is a leakage. You should stop it. Imagine you're paying for subscription. So maybe I saw there was this lady online, Adefe was like, oh, she paid for a website to like a platform to create website, and unfortunately it's a recurring payment, and she's done using the app, and she's done using it, but it's a recurring payment. She made it a recurring payment, and her account was being debited. So imagine you're a business owner and your account is being debited on a monthly basis for something you signed up for, and you no longer have need for that. That is a leakage that you should block. And the only way you can identify this leakage is when you look at your outflow, you look at your cash flow statement. So I'm still going to talk about cash flow. What are the practical strategies to maintain a positive cash flow? Accelerate collection. For business owners, I understand that sometimes we do cash sales and we do credit sales. So I'm going to merge all of this together so that you can maintain a positive cash flow. First thing is to accelerate your collection. Or if you don't, if this is most important for those people that do credit sales. If you do credit sales, you should offer discounts for early payment. So if on the norm your clients usually take, let's say, 30 days You could tell them that, oh, if they pay within 10 days, you give them a discount. So you should offer discount for early payment. This will encourage your business, your stakeholders, this will encourage your customer to actually pay early. The next is send invoices. I cannot overemphasize. And just to mention, I'm also I also find myself in this. I don't send my invoices. So try as much as possible to send invoices promptly. The moment you are done rendering the service or you're about to render a service, send out your invoices. Because your invoices is what will tell the business, the person that is enjoying your product or your service, that, oh, this is the amount they're supposed to pay and this is the account they're supposed to pay to. The next is follow up regularly. Don't say, oh, the person has not paid. Okay, follow up. Don't be scared of following up. It's your money. I always say this, don't be scared of following up. Worst case scenario, you send a message and you go offline. But ensure you follow up. And please, why are you even going offline? You've rendered the service. Do well to follow up regularly for overdue payment. Then, also, you might want to negotiate with your supplier. That is, if you buy on credit. You might want to negotiate with your supplier for timeline. Oh, can I extend my payment timeline? Or preferably, you can just ensure that the timeline for your payment aligns with the timeline when your customer will be paying you. So that means that as your customers are paying you, you are also paying them. And this particular strategy is for those people that sell on credit. But if you don't sell on credit, this is not for you. Now, the third is cash drain. Cash drain. Cut cash drain. Look at those leakages in your business. Guys, please, I would want us to do an exercise today. Download your bank statement and I want you to go through it. It will help you to identify unnecessary cash drains. So let me give you a practical example, right? Earlier this week, I was going through my bank statement. And I noticed that randomly I saw 1,000, 2,000, 3,000 debit alert, and I know that, oh, I did not initiate this transaction. I just noticed that, oh, this money was just being deducted. And guess what? Before now, I think a few months ago, I noticed 1,000, I noticed 2,000, but I was not disturbed. But then all of a sudden, I just noticed 1,000, 2,000. Then I made it a point of duty that, oh, I was going to go to the bank. But guess what? Because of it was just 1,000, 2,000, I told myself that 1,000, 2,000, the amount I'm going to spend on transportation to go to the bank, to go and make the complaint, it was not worth it for me. So I did not bother. But during the course of this week, I got I think close to 5,000 or 6,000 debit alert. And when I got up to close to that amount of debit alert, I was worried that, oh, why am I getting this alert? So I spoke to my neighbor and she was like, oh, I could actually just call their online customer care and they can attend to me rather than going to the bank. So I called them and they were like, oh, my card has been compromised and all of that. That is why I'm getting that alert. So immediately they blocked it for me. So, but now this is not about your card being compromised. This is about unnecessary subscriptions. So if you have unnecessary subscriptions, those subscriptions you subscribe to that you're not using, if you are using YouTube, if you are someone that you prefer Spotify or Apple Music to YouTube Music and you subscribe for YouTube Music, this is the time for you to go and eliminate your YouTube Music subscription or overheads. So try as much as possible that you go through your bank statement and identify those unnecessary subscriptions and you eliminate them. Then also you want to track and reduce wastage in your daily operations. Go through your operations and see how you can reduce or cut down wastage. So to do a perfect example of this is my sister. My sister is into business. She sells ready to wear, and then she realized that for every time she acts as a middleman between the tailor and the customer. She get the tailor to sew and then she delivers to the customer. So she realized that for every time she places order, she has to pay transportation to we bill it to herself, and then she delivers to the customer. So she realized she was doing that, and she realized that the amount she was spending on transportation was practically eating into her profit. So what did she do? She make it a point of duty that she gets a substantial a minimum amount of order. When she gets a minimum amount of order, then she push it to the cost to the tailor, and when she push it to the tailor or the fashion designer, they produce it, and then they send it in bulk to her, and then she delivers to all her customer. That way she's just paying one transport fare or one transport fee for more than 10 orders, instead of paying the same transport fee for every order that she gets. So I would want you to look at your daily operations and identify those areas of wastage, and then try as much as possible that you eliminate it. So the fourth is avoid excessive debt. So for to avoid excessive debt, I know a lot of business owners that are like, oh yes, I got a loan maybe from Bank of Agric, I got a loan from the bank to be able to grow my business. Yes, that is good. But please don't borrow. Don't borrow if you know that you are not growing. Don't borrow if you know that you are just trying to survive. Right? Ensure that every debt you are bringing into your business is translating into revenue for your business, and your business have the capacity to actually pay back the debt, pay back and service the debt. When you are borrowing, ensure that you borrow strategically, only for growth and not for survival. Don't say, oh, I just want to survive. That is why you are trying to borrow. The debt can actually keep you down. Then lastly, build a cash flow buffer. I always say this, that as a business owner, remember at the beginning I said that, oh, as a business owner, there's a need for you to actually build an emergency buffer. So as a business owner, please build a cash flow buffer for yourself. Set aside at least 1 to 3 months of your operating expense. So you know your operating expense, employees, utilities, transportation, office expense, you know those basic expenses you incur month in, month out. Identify that amount. It could be maybe 200k, 500k, multiply times 3, that is 1.5 million, and set that amount as your cash flow buffer. It will help you, it will support you in those months when things are slow. So let's go through again the practical strategy. Accelerate your collection, negotiate supplier credit, cut cash drain. The fourth, avoid excessive debt. And 5, build a cash flow buffer. Now, the fourth habit. Why? Pay yourself a salary. Yes, business owners, make it a point of duty to pay yourself salary. And why does it matter? It helps you to build discipline. That way, you know that, oh, the moment I take this money, that is the maximum I'm taking for my business. It also helps you to avoid random withdrawals. It also helps you to prevent random withdrawals. It creates a track record for loans and mortgage. So if you reach out to an investor today, if you go out to some place applications for loan, the first thing they are going to ask you, most investors will ask you is, oh, how much are you paying yourself as a business owner? Because they don't want a situation whereby they will give you loan or they will invest in your business and then you just draw everything out. You draw both the capital and again you draw everything out as in order to like take care of your personal need. So every business owner on the call today, if you've not been paying yourself salary, please fix fix an amount based on your business, based on what your business can afford at the moment as your salary, and make it a point of duty that is what you use. Don't just say, oh, I want to pay for, I want to buy this particular clothes, I want to make my hair, and then you go and withdraw from your business account. Fix an amount based on what your business can afford. And I would like to say this, right? If you want to grow your business as a business owner, this is something you cannot do without. If you want to, I'm going to say it again, if you want to grow your business as a business owner, you must place yourself on a salary. Now let's look at the fifth habit. Build an emergency and opportunity fund. This is easy. Remember we spoke about building an emergency, remember we spoke about building an emergency fund for your business, build an emergency fund for your business, and also build an opportunity fund. So, of course, remember, this is what you might want to do. If you have been keeping your record, when you make profits, you might divide your profit into reinvestment into your business, emergency fund, and opportunity fund, or as the case might be, whichever way you deem fit. But ensure you build an emergency fund. That is no brainer. You must always have this. And the next fund you must have as a business owner is opportunity fund. So the reason why you need an opportunities fund is when opportunity come knocking at your door, you have the fund to support it. So I was trying through the internet, I think a few weeks ago, and I saw a post by Ibuku Awushika. She was telling the story of a young lady that wanted to lease a property. And when she went to lease the property, I think a farmland, the business, her intention was to lease, not to buy. Her intention, get it right. Her intention was to lease. That is, I just want to borrow your property, not to buy the property or own the property. So when she got there, the property was perfect, clearly meets her need. But guess what? The business owner told her that how much can she afford for this place? The business owner wanted to sell it to her and not just lease it to her. So now, if she does not have an opportunity fund, how will she take advantage of that opportunity that came to her doorstep? How will she be able to take advantage of it? So I always advise, as a business owner, you should have an opportunity fund. It could be to maybe start a new project. It could be to fund an expansion. It could even be to bulk purchase. So let me take it once again. Business owner, try as much as possible to ensure that you have an opportunity fund. And the fact is that the fact that your business is little does not, and your business might not be able to have an opportunity fund, that does not necessarily mean that you should be sad. But you should have it at the back of your mind that as your business grow, not all the fund will be reinvested, not all the fund will be given out or consumed as dividends or withdrawals for the business owner. Some of the fund can be set aside for opportunity funds to fund your expansion, to fund a new project, and to fund bulk purchase. So I'm going to go back to my story that I was telling, that I started at the beginning of the call. So I know that during the course of the call, I mentioned that 2 years down the lane, after my dad went bankrupt, he got an opportunity to get back on his feet. But I did not tell you how he got back on his feet. So to get back on his feet, a customer that he had done business for reached out to him and said that I have a business opportunity. I want you to supply this particular company with this particular specification of machineries. Can you do it? And he was like, yes, he can. And of course, it's an opportunity. They are going to give him the funds. All you just have to do is to buy the machineries and ensure it, and then deliver. And if you have been doing contract, you know that most time they hardly give you 100%. That is the 100% payment for the whole project. Usually maybe give you 50% or 80%. And when you hit a milestone, they'll pay you. When you hit another milestone, then they pay you. But the way this was structured is they pay you 50%, and then when you deliver, they'll pay you another 50%. But guess what? Remember, my dad was bankrupt, so he had no money. The only fund my dad had was my mom's jewelry. You know, women, they like to buy jewelry. My mom had jewelries. So when my dad told my mom about that opportunity, my mom was like, oh, sure. So she sold her jewelry so as to support him to be able to buy all the machineries they need to fund that particular business opportunity. And it was that business opportunity that got my dad started, that gave him the boost to start his business. And the business has been thriving. So as a business owner, my dad never had an opportunity fund. Remember, he was even bankrupt. So he had no emergency fund. He had no opportunity fund. So, but I would like to put it to you. Business owners, try as much as possible to have an opportunity fund and have an emergency fund. When you have these two funds, You will not panic. With these funds, you won't panic when disruption occurs because you know you have something to rely upon. So let's talk about the sixth and seventh habit. So I'm going to try as much as possible to go through that as fast as I can. The sixth habit is have a budget and stick to it. Yes, you should have a budget and you should stick to it. I know a lot of people like, hey, that means it's unreal. I create budget as a business owner and I cannot stick to it. That's because you are creating unrealistic budget. Yes, Fatima, that's the truth. It's because you create unrealistic budget, so it is very difficult for you to stick to it. And let me give you an example. Imagine you set a budget that transportation, bear in mind, the government is about to introduce taxes on fuel, so which also means that transportation will go high. So, but let's not even talk about it because that's not the bone of contention. Imagine you know on the norm that every day when you go to the market as a business owner, you go to the when you're going to you spend about 1,000 naira on your transportation. So and if you go to your store every day, you spend an average of 30,000 naira on transportation alone. Then you decide to create a budget of 25,000 naira on transportation. That is unrealistic. Yes, Fatima, that is unrealistic. If you wanted to create a budget, the minimum you should set aside for your transportation should be 30K. And if you even want to go a long way to be a bit realistic, because life happens, right? You might want to set a budget of 35 to account for uncertainty. That is how you can create a realistic budget. And when you create that, then it will be easier for you to stick to it. Yes, it will be easier for you to stick to it. So the budget is just to help you to plan your money, how you are going to spend your money. And remember, if you are not able to stick to your budget, it's because your budget is unrealistic. So I would want you, as a business owner that wants to stick to their budget, to today make it a point of duty to actually create realistic budget and not unrealistic budget. Then, of course, you also want to do actual versus budgeted. Budgeted is like, oh, I budgeted I was going to spend 30K for my transportation. Unfortunately, I spent 35K. I budgeted I was going to spend 100,000 on renovation. I was able to do it for 80K. So you should always have budget. Don't just say, oh, I budget and I'm done. I was able to stick to my budget. You should compare. The key reason why we create budget is for us to be able to compare our budget with our actual spending. Now, let's talk about the seventh habit. Reinvest your profits wisely. Guys, I cannot say this enough. Try as much as possible to reinvest your profit wisely. And to explain this, I like to use the analogy of an Igbo man. I always say this, that when an Igbo man starts his business, you see him, he's living as frugal as possible. He's reinvesting his profit, right? But give that Igbo man 10 years, he will be able to throw the most luxurious birthday party for his wife or for his daughter or for his mom. And the only reason why he can do that and the business will not be affected is because he has learned to reinvest his profit. So I'd like to say this to you as business owner. Don't spend all your profit on lifestyle. Yes, looking good is good business. I understand. But please don't spend all your profits on lifestyle, transportation, traveling, going for conferences, networking. All of those are good, but please don't spend all your profits on it. Reinvest your profit in marketing, reaching more customers, ensuring that your customer enjoys your services, buying equipment to improve your efficiency, training your staff so that they can render better service, right? Exploring, investing in other income streams. There are better ways you can reinvest your profit, but please don't spend all your profit on your lifestyle alone or trying to make your business look good. What is the point of your business looking good when you don't have the business again? So try as much as possible that you reinvest your business, you invest your profits into your business. Now, let's talk about financial tools that makes life happy, that makes life simple. So remember at the beginning, I'm like, oh, if you want to keep your record, there's a need for you to keep your record to track your income. There's a need for you to record. Track your cash flow, track your purchases, track your expenses, record your sales. Yes, there's a need for you to do that. And the good news is that there are financial tools and systems that you can use to actually achieve the financial habits that we've been preaching. You can track and issue invoice with the help of Zero Books. QuickBooks can help you to do this. For your budgeting, you can use your Microsoft Excel. Yes, the Microsoft Excel that you use, you can use that for your budgeting. You can even use Google Sheets. Yes, Google Sheets. You can go to your Google resource, your Google library, and then you see Google Sheets, and you can use that for your budgeting. Payment, of course, I will not want to sit more on this because, of course, as a business owner, you know what to use to track your payments. The cash flow reminder. Remember when I told you that as a business owner, I ensure that all of my transactions are being done through my bank app so that I can put narrative. So that even if I forget to record it, as long as I download my bank statement, I can know what exactly I spend on. Bank SMS, alert, auto transfers. All of this makes life easy as a business owner. So how how does auto transfer help you? Auto transfer can help you to set up, you can tell yourself that for every sale I make, 10% or a certain amount should be contributed to my opportunity fund. Think GT Bank have such features whereby you can make certain alerts that a certain amount, maybe daily or monthly, can be transferred to another account. It is automatic. You don't necessarily have to rely on self-will to do this. Then let's talk about the power of automation. I'm a big fan of automation because I just feel that my brain power should be meant for other things that are more productive. When you automate, it saves times and reduce error. You don't necessarily have to I want to figure this out. I want to figure this out. I want to do this myself. I want to do that myself. I want to instruct my employees to do this. So it saves time and it reduces error. Remember when I said that, you could just put an alert on your app, like GT app. You could say, by the way, this is not an advertisement for GT. You could set up an alert on your bank app that 10% or a certain amount every month. If you don't want to use percentage, you could say a certain amount every month can be for my sales, can be transferred to my savings. If you have customers that are on retainer, you could set up recurring invoices. And also reminder too, you could set up also reminder that every month this reminder should go out to your customers. So that is the power of automation. And as a business owner, look into your business, ask yourself, how can I automate some of my processes? Because when you automate your processes, it helps you to reduce errors. It also helps you to save time. So at this point, I would like to take a pause, and I would like us to talk. I'd like us to ask your questions. I'd like you to all the questions you've been asking, you've been noting down since the beginning of the call. I would like you to please ask me your questions. So do we have questions? You can use the chat box. Someone would be there to get the questions. So I'm just going to take a pause so that we can get our question out.
Okay, so I'm going to the chat box already. There are no questions here yet. Yeah, so there are no questions here yet. So maybe towards the ending you can go back to the question time.
Okay. So I'm just going to run through what we've discussed. And I'm just going to run through what we discussed. But before we do that, before I run through everything we discussed, I would like us to, because for us to be able to exhibit financial habits for our business success, I want us to carry out like a 7 days challenge. Yes, business owner, I would want to challenge you to carry out this habit for the next 7 days. So you could start on Monday, right? The first day, I would want us to separate your business money from your personal money. Yes, day one, I want you to ensure that you separate your business money from your personal money. For day two, I want you to record all transactions. So the fact that you separate your business money day one from your personal money does not mean that day two you're not going to do that. You are building on this habit, right? You are building on this habit. So day one, separate your business versus your personal money. Day two, record all your transactions. Record all your transactions. Day three, draft a simple budget. Remember, your budget must be realistic for you to be able to stick to it. And a good way to create a budget, if you've not created one before, is pick up your bank statement or pick up your bank statement, the account you spend money from, and then go through it. Look at the various expenses that you've been spending money on: transportation, utilities, and then use that, do a 3 month average, that is a monthly average, month one, month two, month three, and then compare how much did I spend on transportation month one, how much did I spend on transportation month two, how much did I spend on transportation month three. Then you pick an average. That would help you to create a realistic amount for your budget. Therefore, yeah, remember, we are building on our habits. Identify and cut unnecessary costs. Go through your business, look at your business, try as much as possible, you cut unnecessary costs. Day five, set aside money for your emergency. And remember, you don't necessarily have to set aside, a big amount. It could be that, out of my profit, 10% will go towards my emergency. Day six, put a salary structure for yourself. You don't necessarily have to implement it in day six, but ensure you take out time to put up a salary structure for yourself that you'll be paying. It could be a percentage of your profit, or it could be a fixed amount based on what your business can achieve. Then day seven, review your cash flow. Remember how to review your cash flow. Your cash outflow, you compare it with your cash inflow. Your cash outflow, and you compare it with your cash inflow. So I've taken time to create a resource for you, and this resource is being supported by account BPO. So I would want us the account BPO will be providing you with the following resource: a simple budget template that you can use as a business owner. It contains key basic business expense that you use, and also is automated to tell you, if you've overspent or you've underspent. All you just need to do is to enter all of the relevant numbers, and it will tell you whether you've overspent or you've underspent. And then the third resource is a cash flow tracker. First is, remember, a financial habit checklist for you to ensure that, you are complying with all the relevant financial habit that is relevant for your business. The second is a sample budget template for you as a business owner, and the third is a cash flow tracker. So all of this resource is being provided by account BPO. So the information all of these resources are readily available for you, and would be shared with the organizer, and they will tell you how you can access all of this resource. They will tell you how you can access all of this resource. Maybe they'll share the link to you, and then you have to just complete the link, and then you get access to all of this resource if you want. So I'm just going to run through everything we've done today. So we started strong with knowing your why good financial habits matters. And we said, when you have good financial habits, it helps you to survive, help you to grow your business, it helps you to access funding from the banks, and an investor. So I'd like to say this as a business owner. Remember, if you want to access funding, as a business owner, they will ask you for your business record. They will ask you for your business record. They want to see your track record, right? And if you've not been keeping your record, guess what? You won't be able to provide all of this. You won't be able to provide a track record. So that is why financial habits matters. We went through the common pitfalls business owner face. We spoke about mixing personal and business money together, spending revenue before you cover your expenses, ignoring small business expenses, poor record keeping, and lack of emergency buffer. Sorry, lack of emergency buffer. Also, we explain why you should separate your business and personal finance. We spoke about the core financial habits for business growth, how to track your expense and income, maintaining positive cash flow. We sat here a bit. We explain why it is good that your business must have a positive cash flow and how you should monitor and how you can monitor your business cash flow. Practical strategies to maintain a positive cash flow. We also spoke about why you should pay yourself salary. We also mentioned why you should build an emergency fund and an opportunity fund, of course, for your business expansion and to be able to weather all type of season that your business may experience. We also spoke about budgeting and how to stick to it, reinvesting your profit wisely. Financial tools, we spoke about the various financial tools that you as a business owner should have. Tracking and invoicing. We mentioned that you could use Zero Books or QuickBooks, and even Excel. Excel can actually help you with tracking and invoicing, budgeting, Google Sheets, Excel. Your payments, you could use platforms like Paystack or Flutterwave. Cash flow reminder, bank SMS, and alert or auto transfer. We also mentioned the power of automation. As a business owner, your focus should be scaling your business, not worrying about those other things, those other little things. Why, of course, they matter. So you should focus on automating your business so that you can focus your energy on other things that matters. Then remember the 7 days challenge. So please do well to follow through with this challenge. I'll be sharing my slide with you so that you can go through it and take down notes on those areas that you feel will be necessary for your business. So thank you so much for having me.
Okay, thank you so much, Ma. Thank you very much. This has been very, very impactful and great so far. So if you have any questions, please, this is the time to ask. For that, please, in the comment section, let's give our speaker a round of applause. She has poured into us, and I've learned so much today. I've learned so much today. So in the comment section, okay, I'm already saying thank you. Okay, thank you from our Abraham Queen. Okay, thank you from Uyewole Busayo, Charity Cakes, Esther, you, Nexa Care, Akoni Damilola, Busayo Akinremi, Bilonia, what's up, guy? Olumuyiwa, Yotomiwa, Abraham Coin, Osatsuya, Yonuposi. Yes, thank you so much. Yes, thank you very, very much. That's so beautiful. So if you have any questions, like I announced on the group, only the people on this call are going to get those gifts. You can see the number of gifts that she mentioned. Think about maybe 4 or 5 resources I should be sharing. This speaks to the amount of value that we always give. And you can never tell when we are going to give you a gift. You can never tell this is a session when you will get a gift or when you will get something. So this is why it is important for always on every live session. So you can get access to the knowledge and then to other things that can help your business grow. So this has been so great. Thank you so much, Ma. It has been very, very helpful. Personally, I've learned a lot, and I'm sure our participants they've also learned a lot. So Ms. Dami talked about having a 7-day financial habits challenge. That's something we can work around after the start program. Definitely. This was also what one of the panelists yesterday spoke about, how he did a 30-day challenge and how it helped his business grow, on Instagram, how it gave me that visibility he wanted. This piece of the power of consistency. So thank you so much, Zami. We really appreciate your time, the effort, and everything that you've done to show up for us today. Thank you so much, everyone, for joining us too. And I'm being very, very cooperative in the session, the comment session. So we'll be ending the live session now. Like I said, the gifts that she gave us, we'll be sharing it to only those on the call, those who filled the attendance form. So thank you so much, everybody. Our next class is on Friday, is on Thursday. Next week's class, instead of Friday, it will be holding on Thursday. Right? Next week's class will be on Thursday, 5 p.m. instead of Friday. I'm going to still put this on the group so that nobody misses it. Thursday, 5 p.m. I'll be having our class on pitching, and you'll get to know other details on the group. Thank you so much, everyone.